Gravity Capital. Today we are talking to you investors, telling you what not to do. We did a loan on a piece of property. It was on a farm in Utah, central Utah. The farm was valued at $400,000. We have a first mortgage on it of about $100,000. We lent it to Bob, fictitious name, who I've lent money to before, and Bob, like usual, when we lend him money, oftentimes he doesn't pay on time. We go into foreclosure, but frankly, we love Bob. You know why? Because when a property goes into foreclosure, payments are not made, we make a lot better return. Typical example, Bob here, $100,000, first mortgage on it. We lent it to Bob, a year ago. Bob did not make his payments very well. We put it into foreclosure once, and Bob, right before the foreclosure date, brings a current, which is okay with us. And then shortly after that one was brought current, he did not make payments again, and another 6 months later, we are in foreclosure again. So we have a first mortgage in foreclosure, and there's another mortgage broker we deal with by the name of Gary. Now, Gary does some crazy ass loans, and Gary is what I will call a gambler. He's basically just gambling. He does not protect his position. So the point of this message is that you need to make sure you protect your position. Gary could have done this deal just as easily as he did doing it right. Instead, he did it wrong. Gary's lazy. When you're lazy, you get burnt real easy. This is what Gary did. He did a second mortgage, which again, second mortgages are okay, but they can't be very devastating to you. Gary knew that we had a first mortgage. Gary lent Bob $50,000, and this is what he took for collateral. He basically got a quitclaim deed from the buyer. This is called a purchase with an option to buy back. So oftentimes there'll be people, lenders, who will go to a person. Let's just say you had a house. You'll go to you as a house owner and say, Frank, I'll lend you $100,000, but instead of doing what a bank does is put a mortgage and a note on it, what some of these guys will do, they'll go to you as the owner and say, give me a quitclaim deed to your house, I'll record it, and I'll give you an option to buy it back from me. That way, if you don't pay me back, I end up with your property. It's done a fair amount. We don't do them hardly ever do these. So this is what Gary did. Gary went to Bob, who was the guy that had the second mortgage, and said, I'll lend you $50,000 to catch up Knutson, catch up Gravity Capital. Half of it went to catch us up, half of it went to whatever Bob was going to do with the money. So Gary gives Bob the $50,000. This was his paperwork. He had a quitclaim deed that was non-recorded with an agreement that if he got paid back, that he would no longer have a mortgage on the property or a quitclaim deed on the property, and Bob would own the property again. So Gary does this. He does no title work on the property. He gets no title insurance on the property. He takes a quitclaim deed and he does not record it against the property. What good's that going to do you? Bob could take the property and deed it to Frank tomorrow, doesn't have the property anymore, and you got a quitclaim deed worth nothing. He does no option to buy the property back, which is okay. Again, Gary could have done this deal very easily, correctly. Go to a title company, you get a title report, you get title insurance, you take a quitclaim deed, which is fine, but you make sure you got title insurance saying that you own it, and then you give Bob an agreement that once he buys it back from you, you then give him the property back. Again, when we're making a secured loan, we want to be secure. We have to be secure. This is not secure. This is basically a handshake deal. We don't do handshake deals. This is a secure deal right here. Again, Bob would have done all these things. He would have done the title work. He would have done title insurance. He would have given him the deed. They could have recorded it. They could have gone through a title company. All this would have been done correctly, protecting these guys. This one, they didn't do a damn thing right? So he's just floating out there hoping he's going to get paid back. Now, he may get paid back, he may not. But the point of the matter is this. We do secured loans. You should do secured loans. Do not do a handshake deal. Always do a secured deal and you will be covered. Do it right. It's just as easy to do it right as it is to do it wrong. Gravity Capital, check us out, gravitycapllc.com. Thanks.